What is going on, everybody, and welcome to another weekly update. And what I like to do in these videos is provide you guys some upcoming earnings, some upcoming events to get you prepared for the week ahead. That sounds like something you're interested in. Consider subscribing, as I do provide daily content as well on X at Hemi137, and I provide updated or current events here on the channel periodically as well. So before we get started, go ahead and drop a like, as this video is going to have a lot of information, as we've had one of the biggest weeks of information, essentially information overload over this past weeks. There is a lot to get into this particular week. And so, as per the usual, we always have this slated up here. Again, I try to make these very short because there is a lot of information that is pouring out. We've seen that in the previous week. When we had Tesla and Netflix, we started getting a lot of information. This week, there was a ton of information that just came out, and essentially we'll continue to get more information in the following weeks, at least in the next 2 to 3 weeks, in my opinion, really leading up to NVIDIA earnings and leading into March 11th, where essentially the Fed funds rate is going to stop. And maybe that will be it at that point. We don't know. But nonetheless, we got good information. So let's dive right in. Again, I'm not going to list everything with the earnings. There was a lot from all of these earnings that came out, but these are the really important ones that did come out. I did have one here, or didn't have one listed here. It was Whirlpool that came out on Monday. And that was essentially a good gauge to kind of tell where the housing market is. There was a big uptick on sales because some people have started to buy homes just because of the rates had come down in housing, but ultimately understand that their outlook was extremely bleak. And why Whirlpool matters is because of the fact that they sell appliances. People always buy new appliances when they move into a new home. And so we saw, again, a slight uptick. Again, you have to consider the current framework in which you're working in. Is expectations are essentially in the dirt. And so again, I'm going to reiterate this every earnings until we actually get into a full-blown bull market. But understand, which I think a bull market we are slowly coming into. But again, we still need essentially to price in a recession, because I think it's going to get hit very hard starting now, and we're seeing that now. So being said, we had Whirlpool. They came out again, very bleak forward guidance. Then we had UPS. UPS was extremely important because it gives you the pulse of the market. They deliver packages and goods and all the goods out there that are essentially being sold. And so this is what is important. Is just months ago, essentially, there were forced the union. They essentially unionized and essentially forced the pay of 150 or $175,000 for their drivers, essentially what they had come up with. And then now they have come out this earnings saying that they're laying off 12,000 people. Yes, this is something I've talked about all the time. You cannot increase wages and think that that's going to fix everything. Temporarily, they may fix anything, but you have to understand you cut deep into essentially company margins when you do that. So they have no choice but to lay off tons of people. And something I'm going to get into when I talk about Meta is Meta did that, and they got really light, and now they are very, very good as far as where their currently stance is. But I'll kind of hold off on that one because there's a lot of information from there too. But UPS, when we're talking about that and the massive layoffs and how much they missed by was absolutely absurd. I mean, this is your pulse of the market. It's not going to move the market alone. You have to understand that it is telling you or projecting you what, because we have a very lagging effect when it comes to all this data that we're getting and is being thrown in headline news that people like to throw around that doesn't mean anything because it's all lagging data. And now this is your Q4 earnings that are being reported. So these should be astronomical numbers. And we're finding out that they're not, especially with the UPS. If it's not technology related, it's and that's only because you're building infrastructure right now for AI to essentially give you a prelude of what's going to come next year. Next year, you're going to start seeing some massive improvement in actual earnings compared because of AI usage. But right now, you're building infrastructure. Last year, this year, I think by the back half of this year, you'll probably start seeing um, some actual fruits from the labor of AI by the end of this year, and more so even to the next year. So this year is the year you buy before next year. So that being said, we're seeing a lot of infrastructure plays doing very well, but again, UPS and all the normal postal, your small business is hurting very, very bad, and UPS gives you a good gauge of that. And right now, with their 12,000 people layoff, the numbers are accumulating at a rapid pace this week. There are massive layoffs across the board going on. So you're getting all these earnings. On top of all these earnings, you're getting massive layoffs. The market is still pushing up. Like I said, the market will continue to push up till they start cutting prices, because again, the market's moving off of pencil whipped numbers and data that's lagging. So remember that, because a lot of these revisions that come through, there is massive revisions that come through. That's not going to move the market because it's after the headline news has already gone out. And that's why I have this channel. That's why I talk about these things. Again, I'm not trying to predict. I'm only trying to predict in the next couple of weeks, because I do a lot of swing trading. I do investing. I do intraday trading as well. But I do essentially all three of those. But again, I when I do my trading, it's essentially off of current the next month pretty much. And then I talk about this all the time. I don't try to project too far ahead, because you don't know what's going to happen. You have a set schedule, then you have your headline events that occur, is essentially what you're going off of, and then you have charts. And so Microsoft's earnings came out, and they had essentially $62 billion in revenue. Estimated was 61. Their EPS was 2.93, estimated was 2.78, which was a beat. Again, they sold off pretty heavy though coming into it, which was interesting to see. I talk about infrastructure all the time, and the fact that everybody's forward guidance, even with the AI stuff and infrastructure stuff, is still hurting really bad. And ads for Google, again, didn't do great either. So as Google came in, they missed essentially revenue slightly by a couple billion. So that wasn't too bad, but they beat essentially on cloud, and they beat on they beat on revenue, and they missed on ad revenue going in there. So that was Google in itself. Starbucks, I don't have that listed here, but they missed on everything. AMD, which was another big one on Tuesday, they missed on a lot of stuff except for revenue. They barely beat on revenue, so that wasn't fantastic. And then you had Apple. Apple has been declining massively. Even their expectations coming into this earnings was horribly bad. It was actually lower than last quarter for reports of Q3, which was interesting, because you're supposed to have more sales in Q4, because that was essentially it's Christmas time, right? The holiday season. That's the spending. So the fact that they didn't do fantastic was not was not great at all. So for Apple's revenues were 119 billion. Estimate was 117, which again was a decline, and they beat their EPS 2.18. Estimate was 211. And you have to understand, their revenue was up in the 20, I think it was 120 billion. So it is slightly falling off, which is interesting to see. Then you had Amazon, which Amazon absolutely crushed it along with Meta. Their sales were 169 billion versus estimated 166 billion. Their EPS is $1 versus 78 cents beat. So Amazon did really well, but the biggest winner out of them all was definitely Facebook. Facebook revenue was 40 billion versus estimate 49 billion. EPS was 5.33 versus estimated 4.91. Monthly users is slightly up on 3.07 billion from expected 3.6 billion. And they essentially came out with the fact that they are starting to pay dividends, which was huge for Meta and caused Meta to essentially explode after hours. Anytime any company, essentially, especially a big company like Meta, throws numbers out there like that and then throws in a dividend, people go absolutely crazy for that kind of stuff. So again, it was a very wild thing to see on earnings. Again, this is telling you that the infrastructure is still the big play right now. And it's essentially Tesla has also fallen out of the quote unquote Magnificent Seven. Now it's just the Mag Six, which is funny. And this is something I talk about. You don't want to be buying these Mag Six. You want to be buying Tesla when people are bad mouthing Tesla, when Tesla has robotics. And I talked about this last week, is they have the robotics and everything else that are currently going on in AI, and they're massive leaps and bounds ahead, just like they were in the EV space before EV got big and that big run up. They're doing the same thing with robotics and AI. And so now that they're bad mouthing Tesla, now is the time you buy. You don't buy when it starts shooting back up. Like Nvidia has been on a crazy run right now, and Meta on a crazy run right now. Like if you would have bought uh, Meta back in, I think it was October of, or towards the beginning of last year, they were under $100, and now they're up to well into 400, almost $500 now. So again, it shows you the difference. This is why you buy when people are bad mouthing and not buy when it's on a rip. So anyway, again, a huge week for earnings. This week has still got a lot of good earnings in it, but we've essentially let all the industry leaders report. Now we're going to get into what could be considered maybe the more important companies, because if you're going to see a massive hit in layoffs, a massive hit in the economy, it's going to be small business, and we're going to start getting in a lot more of those kind of earnings coming up. And this week had tons of layoffs, and what I didn't mention here either is PayPal is starting to lay off even more people. So even after their big announcement last week, which I really like PayPal, and now they're starting to trim fat. And talking about Meta, Meta had massive layoffs, and now they're much more lighter and mobile, and they're doing really good. Again, a lot of these companies hired during the big tank pop up during the pandemic and everything, and the ramp up, and now they have to slim down. And being a lot more efficient and everything else, and the use of AI and everything's helping a lot. So I think we're starting to see that here when you start looking at PayPal as well, and slimming down and the changes that they're making. I do like the new CEO and what he's doing. So again, that's one of the ones I am watching on this dip, and potentially a correction when pricing any recession. So now, this past week, we also, on top of all of that, all these big earnings that we had monetary policy this week as well. Again, there was no change that was expected. And then Powell came out, haven't achieved a soft landing yet. He liked to reiterate that. Not likely for rate cuts in March. But one thing that was important that he was saying was, even despite all this data that's, again, that I talk about, pencil whipped and everything else, it's not accurate data, very lagging data. And again, a lot of stuff is revised. You can go back and look at the numbers, and stuff has been changed dramatically. And we are in a recession. Things are looking really bad. But what he said essentially was that they are still watching if for some reason unemployment goes essentially haywire, that what's going to happen at that point is that they may make adjustments. And something I've stated is, when we get our first cut, it's going to be an emergency cut. It's going to be, oh, we did too much, now we need to start cutting, or some big event, overnight repo problems, and have to make an emergency cut. That is when we'll get our cut. Now, you had all these banks that have been reporting that everything's fine and dandy. We actually lost a bank this week, or the New York Community Bank, what I have listed here, their Q4 loss of $260 million loss. They were just supposed to come out with $250 million dollars up and not a loss. So that shows you, and they bought a bunch of First Republic, essentially, bad contracts, right? They were essentially forced to buy them, and now they're in trouble. So we are not done with the banking crisis. We're in that next phase where we're trying to knock out regional banks, and we are seeing. So on top of all the job losses that we're seeing, on top of everything else, inflation still being high and everything else, you're seeing a lot of banks close tons of branches. They are trying to reduce risk. And when you start talking about what's going on with these banks, especially when we want to get into, March 11th, um, and that drop dead date for the banks, that you have to understand that when the money is flowing, people feel more confident the banks feel more confident to lend. And when we start getting, a bunch of layoffs and uncertainty, the confidence of the banks to want to lend, it starts to get low. And if the confidence isn't there, then they're not willing to lend. And that leads to puts a lot more strain on businesses having to get loans to stay operational. And so that's what we're getting into. And that's why this week is such a big issue and problem. You're going to start seeing more of that this week and next week. You're going to start getting more of that information, more bank information. So again, this week is going to be very critical over the next 2 weeks. Is it going to impact the market? I think the market's going to continue to try to push up until we get that first rate cut. We don't know. And again, it's not going to be scheduled, in my opinion. It's going to be an emergency a rate cut whenever that may be. They may not be for another year. We don't know. But again, I can tell you right now, the amount of layoffs that we're getting is upticking and speeding up very, very, very quickly. So you have to be very careful about that. And what's actually interesting is this non-farm that we had on Friday, the U.S. economy adds 353 jobs, with massive headline news layoffs. So I don't know how we're adding three. Again, something I've talked about pencil whipping a lot. But this is also something interesting, and I want to throw this out there. Again, this is just a thought or a thesis that I have is, with all this border crisis stuff that we had going on, all these people coming into the country, there's the threat of potentially going to war, and we're having massive issues with getting people in the military. And what if we essentially go and essentially anybody, right, we start essentially forcing 18-year-old people to join the military. So all these immigrants that are coming in, what if we are planning on going to a big war and we need people because we don't have people? Maybe that is why we're getting this massive influx of immigrants, because now we need people to go to war for us because we don't have enough people in this country to go to war. And this is something that has been a concern over the past 2 years, is that we were losing people with all the vaccination problems and everything else. And essentially half the people didn't want to get vaccinated. So they let go of a lot of people, and they were calling people to come back. And then now we don't have enough people to fight wars. So maybe that's what all this immigration stuff is going on. I don't know. Again, it's just a thought. This is a thesis. So maybe this is where they could be adding government jobs, because maybe they're trying to build a military for a potential war that could be coming on the horizon. We don't know. But if I was to make an educated guess, that's why we currently have this essentially border crisis and everything going on with war on the horizon. So I don't know, but we will wait and we will find out. So with that being said, mortgage demand has fell to a new 30-year low. So mortgage demand has fell to a new 30-year low. Again, with when you want to talk about risk and banks wanting to take risks, they don't want to be taking risk right now. They want people in. It's not saying that they are still trying to come up with unique ways, try to get people to buy, because there's a bunch of new developments that are going on out there. I try to follow everything when it goes in the housing industry and also in the automobile industry. And, they're doing everything they can because people are still trying to make a living. So they do whatever they can to try to get people in houses or buy a new car. So again, we are seeing massive problems there, and the fact that nobody's willing to buy. And now the next step is, with all these layoffs, then you're going to start getting a supply of homes, and people can't purchase them because they're still prices of homes are still ridiculously priced right now. And there's going to be a huge wake up call in the next couple of years when it comes to the housing industry, because you have to understand, even though we may cut, that's not going to fix things. You cut because there is a lot of problems. And then at that point, people can't just not going to rush in, because we just talked about the fact that banks aren't willing to take risk in a unstable environment when there's massive layoffs, when everybody is on unemployment, right? These and people are forcing to liquidate. You can't buy homes, right? You have to have a massive nest egg and a good job for them to be willing to you even qualify for a loan. You have to have a fantastic credit score. There's like so many hurdles you have to jump to be able to do that, to afford a home. So to think that it's just going to be corrected is not, in my opinion, isn't a great um, line of thought moving forward. So again, we will continue to watch and see what happens this week. So this week we don't really have a lot of scheduled events as far as the economy. We had a big week last week. This week is more just, there's going to be random Fed speakers throughout the week now that they're not on. They just gave monetary policy. Now they're all going to have an opinion about when the rate cuts are going to be. So you're going to get some intraday volatility from all the Fed members there. Next monetary policy isn't till March. So you're going to go all throughout February with nothing. You're going to get some more, you're going to get some core inflation here in about another week. And then we're going to go from there. But ultimately this week is really headline news, because I expect a lot of headline news over the next 2 weeks. You're going to get a lot of earnings, and really important earnings. So as you can see here this week, Monday, you have Palantir, which is another great one. This is what I'm talking about. Before this stock takes off, you're going to want to be in particular stocks before they start ripping up. And Palantir is one of them. I really like what they're doing, and dealing with a lot of data and making it useful data is important with AI. And again, when I think next year, this is a next year play for me that I think is going to really do very well. Again, this isn't financial advice, but do very well when you start seeing those numbers come out. So Palantir is a good one for that. That will report on Monday. And then you got Caterpillar. This is going to be great to see what is currently going on with the infrastructure of the U.S. and see where that is at, and see if there's uptick there. It's a good gauge on essentially pulse of the market to be able to watch that. Tuesday we have Spot and Snap. They're not real big ones in my opinion, but one thing about Snap is for some reason had a very, very impactful weight on the market. And we can see that it was doing very well, and then essentially got crushed because Apple essentially denied them. And so they're trying to figure out unique ways to be profitable after they started getting very profitable and doing very well. And then all of a sudden Apple cut them off, and then now they're just wandering around. So nonetheless, it's interesting to see these two. Again, I'm not a huge fan of it. I like their products, but again, it's not a company I'm really invested in, but it's still good to be watching those. PayPal, again, I just talked about this one. I really like PayPal in the next couple quarters. Maybe a down quarter on this one, but I expect the next one to do very well and remaining into 2025. So I want to see what they're doing there. Roblox, again, if you're looking AI and stuff like that, again, I think it's still another good play, in my opinion. Over the next 2 years, I think Roblox will do very, very well. Just because what their infrastructure is vastly ahead of everybody else. When you want to talk about a whole virtual reality space and having that kind of that meta atmosphere, I think they are leading the charge on that one. So, and then Thursday, Affirm is going to be very important, because buy now and pay later has been a huge trend over this past holiday season. So I want to really see how they do, especially with Amazon doing well. Expect Affirm to potentially do well. But again, Amazon made all their money off of essentially a big chunk of their money off of that that's infrastructure side. Like I said, infrastructure right now is going crazy because of AI building up for the next several years. So A firm will be interesting to watch there and see how well it does, especially with the buy now, pay later. So that would be a good one to watch. Cloudflare, I think it'll be a good one to watch. I think that's another industry a lot of people are leaving out. Security is going to be, cybersecurity is going to be extremely important moving forward. Into the next, it could be another industry that really booms here when we talk about this AI and robotics, and security is going to be really big, especially when I just talked about potential war on the horizon. So upcoming expected moves here. SPX obviously is going to come down a little bit. We don't really have a lot of scheduled events, although I do believe there's going to be a lot of headline news that can move the market in general. So it is a little bit higher than normal, but it's not crazy because we haven't have a crazy sell-off. We started selling off a little bit during the week after Powell spoke, but then the market kind of just upticked like it wasn't anything. Like it's essentially, this is what it does when you have an official pause on rates. So again, until we get that first rate cut, I expect the market to continue to push up, led by anything infrastructure for AI. And then Tesla right now, it's been beaten. It hasn't really fallen off too much. It's been holding that 185 very well, which I like. And again, something I want to accumulate because, again, I think they are leaps and bounds ahead of everybody and have essentially the payroll to be able to continue that and continue to lead the charge on that well before everybody else. So now, again, that's not expected to have a big move this week. But again, I think accumulation for Tesla is anything currently right now would be worth grabbing. Again, not financial advice, because we could price in a recession. We don't know how low Tesla can get at that point because there's just fear at that point. So then you also have Boeing, which is coming back down to more sustainable levels now that it had that massive sell-off with all the fear of the planes. So it's kind of equaling out back to normal numbers. And then JPM is just stuck at 3 and really isn't doing a whole lot there. So with all that, that is pretty much everything with that piece. Now let's get into some charts here. As far as the SPX, again, this was when we officially paused around that 4,100 level. I said we had to hold that, or that was pretty much it. We were making a new bottom. We officially paused then. And then the market's been ripping ever since, back to new all-time highs. And trying to test that 5K. I expect us to try to hit that 5K. Maybe even longer. Again, it really just depends on when we get that cut. Until we get that cut, I don't expect a downside until that happens. So again, I've been playing a lot of intraday stuff. I play anything supports AI, whether that's cloud infrastructure or chips. Those are the plays to play right now. And then until that changes, until we get rate cuts on fear because of layoffs or whatever the case is, or problems with overnight repos of the banks, that's going to draw new fear in the markets. And then once that price is in a recession, then from that point, buying heavily on that dip, because I think, again, we'll recover. It will take some time. I'm not saying the first dip, buy the dip, but what I'm saying, this is why I have essentially supply and demand zones, because of the zones I buy in. But you could potentially expect a 42% change in the index. The pricing in a recession, something I talk about all the time. Now, we did price in, I think it was around 29% in 2022, mainly because of tech, and then we were let out of that because of AI. And then now, again, people are starting to see that AI really isn't doing what everybody was hoping for. It's because they have to build the infrastructure. So everybody's hyped off the infrastructure. Well, we won't actually see, again, the fruits of that labor till next year and the years to come after that. But now is the time to buy before that happens. So just be mindful of that. So as of right now, again, we're still in price discovery mode, aiming for 5K. Like I said, we had a little bit of a pullback because of Powell, but we'll continue to see. Again, if there's headline news, if there is any headline news this week where they say price cuts, get ready for sell-off. Again, when they say price cuts, we don't know when that's going to be. Again, I would be, if I was a betting man, I would say that is when it's going to happen. And be reading headline news, because when it happens, that's when you're going to start getting your correction. So until then, all is fine with the world and we continue to go up. So And we are talking about the stock market here. It doesn't make sense, but that's the way the market makes sense, right? Until there's a cut, there's no point in going down, right? There's no new fear. And now is the time, since everybody is getting bullish, to, right, something break, start cutting. Now recession, right? Because that cut is going to be based off of recession, right? They're going to officially like, oh, we're in a recession. They're not going to say we're in a recession. It's going to be some really bad news. It's going to force the hand of the Fed. That's what's going to happen. So we'll see continue to watch here and see what happens there. Again, we're in a utopic state, so I don't expect a lot of change there. But the Bitcoin did get a bit of a pump this week. We'll see how that is. Right now, our top's kind of that 50K. I expect this to come. Right now, it's a higher low, so I expect this to come down. I'm thinking we can potentially get down to at least 30. Again, when we get that, we won't know for sure until we get the cut. When we get the cut, we'll know where we're headed. Until then, I am actually expecting a lot more chop with Bitcoin. Not really expecting a whole lot to happen. Again, accumulation on all those coins and stocks that you really like now is important because I wouldn't be buying the stuff that's already at all-time highs right now. I would be buying the stuff that's beaten down right now, which there's some good picks out there right now. But again, we'll continue to wait until that pricing comes, because then is when you're going to really want to be buying, as that will take a couple of months for that to play out after the cuts. Because once it starts, like I said, once we hit that wall, hits that brick wall, it's going to hit us like a ton of bricks, and then it's just going to start selling off over the matter of a couple of months as these real numbers start really showing up and kind of really giving you what's really going on. And again, we're in a election year, so they may try to do whatever they can to keep it up until after the election, and then we may not see a cut until next year. So you have to keep that in mind. So it can happen at any time, but until they announce it, the market's going to go up. So Bitcoin, I think, will just chop until the market essentially figures out what it's going to do, and then it'll move from that point. So that's where it is there, but the top is 50. The current support is, again, roughly around the 38. So kind of watching that moving forward. Now, Tesla, again, it's getting beaten pretty badly. It's been holding this level very well, this 185. I've been accumulating some here. I really kind of want it down here at the 150. Buy a big chunk down here, in my opinion. And then hopefully it can get even lower than that. I'm just going to accumulate as much Tesla as long as it continues to remain under 200, and watching these levels and buying at those levels heavily. Again, I think Tesla will have its day again, and that may not be to the end of the year, but once they start talking about Optimus and where that's going, the market hasn't even priced in Optimus. The market only cares about EV. And so at this point, let them think of what they want, and that's when you accumulate. That's exactly what happened to Meta just a year ago, 2 years ago. Meta was under $100. Now it's over, almost $500, right? It's the same exact thing. I think it's going to happen with Tesla. I think it's going to be even a bigger move, because Optimus is a bigger change than anything else that we've ever seen, even bigger than EV. And so when that happens, it will be massive. And so you have to be patient with these things and can't just expect overnight stuff. So I do some intraday stuff, but again, you have to ultimately understand, if this is an investment, you want to be buying this dip. It's already declined quite a bit. I'm expecting a lot more, so we'll continue to watch and see what happens there. I'll bring up this one, Snow. Again, another infrastructure play is just massively ripping. It's making it's new price discovery. Actually, it's not new all-time highs yet. It's coming to a bottom here, so we'll have to test at 250. It may be able to even push up to 250, but we're gonna have to see here. So you got a lot of breathing room here. And again, I think the market continuing with infrastructure plays for AI and cloud. I think a lot of those can continue to push up, and Snow is one of them to really watch these next couple of weeks. So then you have Palantir, again, much like Tesla. I think it's a fantastic company, and there's actually some news that came out that they were supporting supermarkets, I believe, and doing very well on improving. That's what I'm saying. This product, once it gets out there and people are aware of what it actually does, which they're getting more exposure now, they're going to explode, especially on this next run. maybe as long as they can continue to remain profitable, but I think at some point this year they'll be added to the SPX. And then on top of that, I think by next year they're going to just kill earnings. Anything that I'm talking about now, Tesla, Palantir, are going to just kill it in 2025, in my opinion. Maybe even the back half of this year. Not quite sure yet, but we will see how that plays out. But I think we're very close to them doing very well. So watching these ones here again, market's not pricing in what this is at. I think if it breaks this 14 level, again, I think we're going to at least see back at the 10 for how long, I don't know. That's when we start pricing in a recession. I want to see where these levels come back down to. Will be very important. So watching that one there. Let's take a look at BA. Now BA again, it's starting to get choppy again around this 220 to 200 level. So I think this will just continue to accumulate here since it had all those plans were falling apart. So it finally sold off. So I think it will just continue to accumulate until we price in a recession, and then this will dictate which way this goes, I think, in my opinion. So we'll see what happens there. But those are the current ranges I'm watching there. For JPM, again, it's not expecting to do a whole lot. It's going to float around all-time highs, I think, until we get that first cut. Again, this thing's going to sink right back down to 140, in my opinion. I don't expect this to make new highs. I think even Jamie Dimon came out and was talking about the war and how important war was coming on the horizon, and that he even talked about the military, something I was just talking about. So, and that we are in dire need for military personnel. And so again, that's why my thesis is maybe that's why we're allowing so many people to come in, military age immigrants, to be able to fight for us, because we don't have the manpower. And so with that being said, that's pretty much all I got. So it's going to be a very busy week. It's going to be a week you're going to have to definitely be paying attention to headline news, because again, I think there's going to be so much information. People aren't going to know how to digest everything. So with all that being said, have a great day. Always have a plan. Again, none of this financial advice, and I will see you guys on the next one.